Hey, how's it going everyone? Welcome to another RF Crypto video. On today's markets, the global crypto market cap is standing at 1.73 trillion and it's up by 4.1%. This is following yesterday's decrease by almost 5 to 7% depending on the time of the day. Bitcoin had reached 36,000, Ethereum had reached 2,300, and now it has bounced back. The markets are doing quite well. Obviously, yesterday's markets didn't perform too well. They reacted negatively to the news that Russia was sending forces to the eastern regions of Ukraine, or the breakaway regions of Ukraine, which sparked fears of a massive escalation and possibly another global conflict. So when there is fear in people's minds, especially geopolitical fear, people tend to flock out of crypto because they're more risky assets. They also tend to flock out of high-tech stocks, which are also risky assets, obviously not as risky as cryptocurrencies, and they take that money and they tend to put it in assets which are safer, such as gold, which saw its price increase yesterday, and hence the price of cryptocurrencies yesterday's decreased. But today it's back up by 4%. It's made a good recovery. The correction today indicates that yesterday was an overreaction and people sold more than they had to. So today the markets obviously corrected themselves. And with this conflict unfolding and with a lot of military movement going on, it's going to be interesting to see how the markets are going to react to it, especially since there is movement militarily from both sides of the playing fields, the East and the West. Tying in to the East-West conflict, or the Russia against Europe conflict, Boris Johnson announces UK sanctions against Russia. 5 banks have had their assets frozen, along with 3 Russian billionaires, who will also be hit with UK travel bans. It's not about the bans themselves, but it's about how this can fuel the rise of cryptocurrencies or the wider adoption of cryptocurrencies. At the moment, central banks around the world, especially in Western countries with a lot of power, such as the US and UK, have the ability to freeze billions and billions of dollars worth of money and worth of assets. With that in mind, they can just do it at a whim. They can do it with any justification they want, be it national security, be it geopolitical interests, which happen here. And I think this gives precedence to the fact that one way that a lot of people are going to avoid these type of sanctions, especially since a lot of these people that are targeted may not be directly involved with the conflict, they're just collateral damage. These people, in order to protect their assets, they might convert their assets into cryptocurrencies. Maybe not all of their assets, but at least a good percentage of their assets, in order to not be able to be targeted by the UK as it was at the moment. And I think being decentralized and not being controlled by the government especially, cryptocurrencies offer a way to protect people, especially these billionaires, against targeted asset freezes from the central banks. And I'm not saying that central banks shouldn't have the power to freeze assets. Obviously, they should have the power when it relates to crimes such as money laundering, terrorism, or any other criminal financing. But when it comes to geopolitical battles, a lot of these freezing of assets are more political than anything else. So I think a lot of this can be avoided through the adoption of cryptocurrencies, and I think people are opening their eyes, especially more affluent people, millionaires and billionaires, to the risk of their assets being frozen, maybe sometimes for no reason whatsoever. So cryptocurrencies are another alternative, especially Bitcoin, which are a good store of value, and called the digital gold. We'll speak about this next, and I think that's why there has been a lot of inflow specifically to Bitcoin, even though we're living through such a tumultuous phase in the 21st century. Linking to the last sentence in the previous article, $89 million flows into Bitcoin funds despite looming conflict, but Ethereum funds are negative. So amid a market-wide downturn across major crypto assets over the past week, institutional traders tipped almost $89 million into Bitcoin funds. However, it was the opposite in Ethereum, which saw outflows totaling almost $15.5 million. And it seems like digital gold appears to be the asset of choice for sophisticated investors of late. And I think sophisticated investors is a euphemism for wealthy and affluent investors. And I think with the looming conflict, people tend to think that money is going to flow out of crypto and into safer assets like gold. Of course, money has flowed out of crypto. A lot of money has bled off crypto. But Bitcoin is probably the only crypto where money has seen a positive net flow in the last 7 days. This is mainly because people trust Bitcoin as a digital gold or as a store of value in order to protect their liquidity and investments. But another factor is I think a lot of people are now seeing that Bitcoin offers a safe haven from being targeted by these central banks, being targeted by unnecessary regulatory requirements from commercial banks. This trend is only going to continue to grow. And at the same time, Bitcoin has outperformed bonds, has outperformed cash and stocks in the last 2 or 3 years. So it's a no-brainer for people to be transferring their wealth into these products. Tether slashes commercial paper by 21% in the latest reserves attestation. So commercial papers are basically unsecured debt so that companies can meet their short-term obligations, and they can be quite risky. And I think that's why Tether has decreased their exposure to commercial papers, because in the beginning they had commercial paper, or they had to have commercial paper because it was the easiest way to back the amount of Tether that was in the market at that moment. But now, with more revenue coming in and with the more stable company and financial environment, I think that they can afford to decrease their exposure to such a risky asset, especially since they're a stablecoin. So they decreased their commercial paper allocation from 30.5 billion to 24.16 billion, which is massive. And of course, Tether is now legally required to disclose its reserves every quarter as part of an 18.5 million court settlement with the Office of the New York Attorney General from February 2021. And this is because I think that they were falsifying data in order to make it seem like they had enough reserves to back the amount of stablecoins in circulation, but which wasn't the case. And now they're forced to disclose its reserves every quarter, which is a good thing because it keeps transparency and it gives the investors or the traders some sort of relief or some sort of security that whatever they hold in USDT is being backed by real assets in their balance sheet. The New York Stock Exchange owner, ICE, buys stake in T0 security token platform. So T0 operates a blockchain-based alternative trading system upon which companies can list tokenized version of their stocks. And this firm is fully regulated with the SEC and acts as a broker-dealer in the digital asset space, also offering a number of cryptocurrencies. This is a manifestation that the whole world is moving to the digital space and the whole world is moving to the blockchain. Even the New York Stock Exchange is spending money on companies which have the technology to launch digitized version of stocks. And I think in the coming years, maybe not even coming years, maybe in the coming months, with the integration of T0 to the Intercontinental Exchange, which is ICE, I think the New York Stock Exchange will start offering tokenized version of stocks, and these may start with companies that are already in the blockchain or have their foot in the blockchain, such as Samsung, such as Apple, such as Meta, obviously Meta, and everyone will want to jump into this opportunity to have their stocks tokenized. And let's not forget that there has been an increasing interest of the NYSE towards the digital asset space, because in February 15th, a few days ago actually, it filed a patent application for a number of crypto and blockchain related products and services, which include an online marketplace for trading crypto assets, NFTs, and metaverse technology such as AR software. So the largest stock exchange in the world is moving into NFT, into the metaverse, into trading crypto assets, into actively trading crypto assets, and possibly now with the acquisition of T0 into digitizing the stocks that are listed in the New York Stock Exchange already. Very exciting times, a time of revolution and a time of change. Moving across the Atlantic, London Stock Exchange acquires cloud-based technology provider Tora in a $325 million deal. So Tora offers software trading solutions for customers exposed to stocks, forex, fixed income securities, derivatives, and what's in focus here, cryptocurrencies. The justification for the investments in terms of cryptocurrencies is the addition of digital assets to the London Stock Exchange Group's trading capabilities. The addition of digital assets to the London Stock Exchange Group's trading capabilities strengthens its presence in this rapidly expanding asset class at a time when institutional market participants are increasing exposure to crypto and other digital assets. So this increasing interest of stock exchanges in the digital asset space, especially with crypto, NFTs, and the metaverse, is only going to accelerate the adoption of the general public of these technologies. So Tora's trading solution is called Caspian, and this aggregates price, bid-ask information, orders, positions, accounts, and executions from multiple crypto exchanges and other sources, presenting the information on a single platform. It then enables users to send information to crypto exchanges individually or to multiple exchanges all at once using its smart order router technology. Obviously, this is for the integration of blockchain and crypto trading in the London Stock Exchange with a network-wide blanket where the London Stock Exchange can actively communicate with other crypto exchanges. Puma registers an Ethereum name service domain and changes name to puma.eth on Twitter. So Puma is the latest in the growing list of major brands to purchase a decentralized URL and reveal their non-fungible token or NFT by changing their Twitter handle to puma.eth. So Puma's ENS name is one of several NFT related moves the company has made recently. According to the puma.eth OpenSea page, Puma has invested in various feline inspired NFT collections, which makes sense because Puma is a cat. And obviously Puma isn't the first one to invest in Ethereum domains. Other ones include Budweiser, the subsidiary of AB InBev, which is the largest drinks company in the world, or alcoholic drinks company in the world, which bought beer.eth through ENS on OpenSea for 30 Ethereum last year. 30 Ethereum is about $90,000. Some of the benefits of an Ethereum name service name include being able to receive any cryptocurrency, token, or blockchain-based asset, in addition to being able to point to a decentralized website and to store profile information like an avatar, email address, or Twitter handle. And at the moment, the ENS has a total of almost 725,000 names created, and Ethereum's competitor, Unstoppable Domains, has over 2 million domains registered. So I think not only is the world moving more towards blockchain, but Web 2 is slowly transforming to Web 3 with crypto integration and with next level or next generation technology being directly integrated to these websites. And I think it's going to turn into a Cold War simply because companies are trying to outcompete each other in terms of the adoption of cryptocurrencies and the ability to provide these services to their customers. And with that, we come to the end of today's video. Thank you very much for watching. If you like the video, please leave a like, please hit the subscribe button, share this video with family and friends, and I'll see you tomorrow for the next one. Invest wisely, and cheers.